Bonjour et bienvenue au deuxième podcast d'Espace Microcap.tv. Sur le podcast aujourd'hui, j'ai avec moi Hogan Mullally, un conseiller en relations investisseurs et un investisseur d'expérience dans le secteur des sciences de la vie. Aujourd'hui, Hogan va nous expliquer comment investir profitablement dans les compagnies biotech. So, Hogan, how are you today?
I'm great, thanks.
Good. Maybe first you can start by introducing yourself to our audience. What is your background? How did you get involved with pharma and biotech companies?
Sure. Well, I've been in the Canadian life science sector for the better part of 20 years. The first half dozen or so were spent in pharmaceutical sales. I actually got my start with a Montreal-based company called Fournier Pharma. And from there I worked for 3M Pharmaceuticals and was eventually recruited to go and work for a Winnipeg-based drug development company where I worked in-house doing investor relations for about 4 years. I left there and started my own consulting business in 2008, and I've been doing that ever since. And then subsequent to that, I've actually had, a fair amount of success, and I spent a lot of my time now investing directly in biotech companies. It's a true passion of mine.
Okay. Maybe before we go into more details into how you invest in biotechs, could you define exactly what is a biotech company?
Well, I think that's a great question because I think in Canada we take a bit of a lazy approach to defining biotech. I think we tend to lump some of the wrong companies under that label. To me, the term biotech involves drug development. So companies that are spending a large amount of their cash on research and development. Companies that are doing more diagnostics, medical technology, devices, and specialty pharma companies.
Okay.
Those aren't really biotech companies. Biotech to me is a different category. It's got a high risk-reward ratio, so the opportunities for success are enormous, but the failure rates are also high.
Okay.
So it requires its own sort of risk appetite. So that's to me what defines a biotech company.
Okay, so when you look at a biotech company, what are you exactly looking for? What are your criteria for investing in the space?
Sure. So there's really three main criteria that I look for. I think the most important is catalysts. This is a catalyst-driven industry. Okay. So if a company doesn't have a near-term catalyst, then chances are you can pass over it for the time being and wait till it gets nearer term. When I think of near-term catalysts, I'm thinking of 6 to 9 month time frames. And when I'm talking about a catalyst, generally for drug development companies, it's clinical data. Okay. So we're talking about phase 1, phase 2, phase 3 clinical readouts, which are extremely impactful to valuation. So I generally start off by looking for near-term catalysts. From there, you have to look at clinical data. And I think this is where a lot of people get scared because now you're actually having to roll your sleeves up on science a little bit. But I'm a layperson as well. I'm not technically trained in science. So I rely on certain sort of key criteria before I make a decision on the science. So the first thing I look for is, has the data been published in good peer-reviewed journals? So, Lancet, New England Journal of Medicine, these are high-quality peer-reviewed literature, journals where if companies have had their data presented there, that's a validating thing for me. Or another opportunity is at big scientific conferences. So the opportunity to present abstracts or oral presentations at big scientific conferences. Again, that is a company taking its data and bringing it to its peers, and its peers are saying, this is interesting enough, provocative enough for us to put it in our journal, put it in our conference. To me, that's really validating. The third thing would be cash. I mean, these companies go through cash like crazy. I mean, they are burners of cash. You don't even have to look at their income statement. You go to the balance sheet and you just sort of figure out how much they have and how quickly will they go through it. So I'm often looking at the balance sheet, but I'm also wondering about their ability to access cash. So that means their history of being able to raise money. So sometimes you may not see a lot of cash on the balance sheet, but you'll see a management team with a history and a pedigree of being able to raise money, being able to make the pivot from a TSX or TSX venture listed to a NASDAQ. That matters to me. So I would say, catalysts, clinical data, and cash are the first three things that I'm looking for.
Interesting. Any other factors, consideration to when you look into an idea?
Sure. I mean, a lot of companies in this industry like to partner. So another really validating thing for a biotech company is a history of doing collaborative deals. You know, one of my biggest investments personally is a company that's done, you know, collaborations with Novartis and Genentech and Teva. So right away I know the base science is high quality because they've been able to attract meaningful partnerships. So, you know, partnering is a big thing as far as looking for other sort of, you know, check marks. I also like to think you should, you know, follow the smart money. So look at who's invested in the company. Now, you know, here in Canada, we don't have necessarily terrific disclosures about who owns what. But in the United States, they have these 13 Fs that hedge funds have to file every year, or every quarter, sorry. And you can actually see smart money flowing in and out of certain biotech names. So once you learn who the smart money are, follow them. They're doing the diligence for you. So you can go, well, I like fund X, Y, or Z. They have a good track record. They've invested in these companies. That gets you over the hump on your diligence.
Smart money. In Canada, do you have any fund managers or investors that are worth mentioning in this interview?
Sure. There's, you know, unfortunately in Canada, the appetite for biotech still is fairly small relative to natural resources, and therefore the fund management side is also small relative to natural resources. That being said, we do have a few dedicated life science funds which are worth noting. The biggest one would be out of Montreal, Sectoral Asset Management. Very smart money, very long focused money, so definitely a group to follow. In Toronto, we have a newer fund that's been set up by a gentleman by the name of Eden Rahim called Next Edge. He's a very smart guy who's made some really interesting microcap investments, so he's also one to follow. Other than that, in Canada, that's sort of, you know, there's another little fund out of Toronto called Rosalind Advisors, but they tend to keep to themselves, so you don't really know what they're really doing, which is their prerogative. But those are sort of the three main smart money life science funds in Canada.
Personally, as an investor, one of my big concerns is to prevent any permanent loss of capital. So I guess it must be a really challenging thing to do in the biotech space. What do you look at in terms of warning signs, red flags to protect the downside of your portfolio?
Well, it's sort of the inverse of the attributes I just described. You know, so you look at companies that maybe oversell their ability to do partnerships but have no track record of doing them. So that's a very common carrot to dangle to investors is, oh, you know, once we get the data, we're going to do a deal. But you go back and look at the history either of management of the company, you don't see a history of doing deals. You know, be a little concerned. You know, I talked about before data being presented in good forums, journals, and scientific symposia. If you ask management, you know, where do I find information on your data, and they point you to a press release. Press release is an advertisement for the company. It's not a vetting by their peers. So again, that's a little concerning. And then also just, you know, not a track record of being able to raise meaningful capital. You know, it's unfortunate in the Canadian sector we have a lot of companies that just go from crisis financing to crisis financing. You know, keep the lights on kind of capital. That isn't reassuring. You know, fundamentally, if you're going to make a go of it in the drug development business, at some point you need to raise meaningful money that allows you to run meaningful clinical trials and get meaningful answers. And if a company doesn't have the ability to get the capital, then they can't do that.
Merci Hogan. C'est une entrevue vraiment intéressante. J'espère que vous avez appris autant que moi. Donc, c'est terminé pour l'entrevue. Je vous invite à visiter notre site web espacemc.com pour d'autres contenus intéressants sur les microcaps. Et je vous remercie d'avoir écouté.